Hello and welcome to Stock Market Fever. Amazon shares are in the spotlight today, advancing up about $100 a share, capping off a 5-day run-up of almost $400 per share from 2025 last week to Tuesday, May 31st close of 2,404. Part of this run-up was from the market's overall attempt to recover from a brutal sell-off this year, which only accelerated after the news of inflation and the Fed's raising interest rates beat many hitherto high-flying stocks way down. But when traders returned from the Memorial Day weekend, they perhaps smelled the coffee and remembered that inflation was not yet in check, that oil prices were still rising, and the Fed would continue to hawkishly raise interest rates to bring inflation back under control. So the momentary market recovery disappeared and the Dow closed down over 200 points. But Amazon bucked the trend, rising to 2,404 by the close, up over $100 for the day. In this video, we will explore where Amazon has been over the last few years, how its 20-to-1 stock split coming up might be affecting its share prices, and what analysts forecast for its future. And you'll definitely want to stick to the end to see what we at Stock Market Fever forecast for Amazon. Okay, let's start with earnings. If you were to look at Amazon's earning over the last 3 years, you'd be mightily impressed. For 2019, Amazon reported annual earnings of $22.99 per share. That jumped way up to $41.83 in 2020, as a result of COVID turning millions of consumers worldwide to shop online. And in 2021, Amazon again turned in a stellar earnings report, earning $64.78. One can speculate that a good part of Amazon's amazing 2021 was due to massive government infusion of cash into the hands of consumers in the form of stimulus checks. But all this joy and happiness was not to continue for Amazon into 2022. In a letter released to shareholders this past April 14th, Amazon CEO Andy Jassy warned of a bad financial performance for the first quarter. His heads-up letter attributed Amazon's cost challenges to extra labor costs and transportation costs. And Amazon's heads-up letter was followed with the report itself, a real shocker showing operating cash flow decreased 41% to $39.3 billion for the trailing 12 months, compared with $67.2 billion for the trailing 12 months ended March 31st, 2021. And just as disturbingly, for the first quarter of 2022, Amazon reported that free cash flow decreased to an outflow of $18.6 billion for the trailing 12 months, compared with an inflow of $26.4 billion for the trailing 12 months ended March 31st, 2021. Thus, Amazon declared a loss of $7.55 per share for the quarter. And Amazon stock was viciously punished this year. Holding up surprisingly well in the beginning of the year, while most of the broad market was down, Amazon stock started its downward trajectory, dropping from $34.17 at its high at the end of March all the way down over $1,000 per share to reach 2023 on May 23rd. But then Amazon had its mini rally, coming back almost 400 points to close at 2,404 on Tuesday, right after the Memorial Day weekend. So the question you might be asking is, why did Amazon stage this 400-point rally? And why did its rise $100 a share on Tuesday when the broad market was down? We believe that part of the rally was due to being part of the pack of the overall broad market rally back, but part of Amazon's rise was also due to its 20-to-1 stock split, which is coming up with the next split date of June 6th. Although it is true that splitting a company's shares does not increase the value of the shares, it is in fact similar to splitting a pizza pie into extra slices, the total pizza size remains the same. Stocks do have an overall tendency to increase. According to Bank of America, stocks that announced a stock split increased 25% on average over the next 12 months, compared to 9% for the broader S&P 500. Thus, we believe, in anticipation of Amazon going up after the split, investors are buying shares in anticipation that future investors will drive the price even further up. So what are analysts forecasting for Amazon's future? We'll be glad to tell you in a moment, but if you like this video and would like to see more like this, please click the like button and subscribe to receive future stock market news, analysis, and alerts right here at Stock Market Fever. Thank you very much. Overall, industry analysts are bullish on Amazon. Out of 47 analysts covering the shares on May 43 rated Amazon as either a buy or strong buy, and their average target price of $35.95, which represents over a $1,000 per share rise, must be enticing. But before you get too excited and run out and buy Amazon shares, please remember this: analysts can be wrong. In fact, these same analysts were also overwhelmingly bullish on Amazon going back to February this year, when the stock was trading about $1,000 higher than it is now. In fact, securities analysts at Jefferies just became more cautious about Amazon. While they maintained their buy rating, they lowered their target from 3,700 to 3,250. They were especially concerned that the factors that weighed down in the overall economy, inflation, rising oil, and transportation costs, would adversely affect consumer sentiment and willingness to spend. Jefferies observes, the accompanying poor attitude among consumers and businesses is likely to lead to more cautious spending patterns, with headwinds expected to grow as the recession continues. For consumers, this means less discretionary spending on higher-priced physical things and increased price sensitivity when it comes to service items. Additionally, analyst JR Research on May 2nd expressed caution about Amazon, similarly wondering if they had overcome the same headwinds, and noting that the stock had already breached, even back then, a critical support level, and needed to justify its extremely high price considering its lackluster projected earnings growth. And where does Stock Market Fever predict Amazon shares are heading? We'll be glad to tell you. We're glad to take a stand. We're very brave like that. But before we do, if you like this video and would like to see more like this, may we request that you please smash that like button and subscribe to receive future stock market news, analysis, and alerts right here at Stock Market Fever. Thank you for helping our community grow. Okay, here it is, the moment you've been waiting for. While Stock Market Fever does not offer investment advice, we gladly offer our opinion. Like Jefferies and JR Research, we don't believe that the overall economic headwinds will fill Amazon's sales, and thus the actual company growth will be modest. Thus, in our opinion, the price of Amazon will rise in anticipation of and after the split to trade at around a pre-split price of $2,700 within the next 6 months. But we believe that part of this rise will be due to the split, and that financials for the second quarter, expected to be reported on August 4th, might show that they have better managed their headwinds, but will not be on any great revenue or profit trajectory. And thus, in our opinion, we would categorize Amazon as a hold. But what do you think? Where do you think Amazon is heading in the short run and long run? Would you recommend buying, selling, or holding? And why? Please leave your thoughts and comments below, as we'd love to hear from you. And please be sure to like and subscribe to Stock Market Fever for future actionable stock market news, analysis, and alerts.